Hello and welcome to this very special edition of Boardroom Brunch right here on News9 Live. I'm Kartik Malhotra and surprise, who do we have with us in the studio today? Well, let me not say it, should I? We've got with us none other than a shark in the making and somebody who has had such a massive influence on all our investments, all our lives, and the lessons that we've learned from her all these years are so invaluable. Yeah, no points for guessing because I've got with me none other than Radhika Gupta, MD and CEO of Edelweiss Mutual Fund, joining me on Boardroom Brunch. Hi Radhika, what a pleasure it is to have you here in our studio, physically, not virtually, which we've all become so accustomed to.
I know.
But I really want to discuss so many things with you. And I don't know where to start. But I think what is top of my mind right now is your regulator.
Okay.
Is Sebi. I'm talking about Madhvipuri Bush. I'm talking about the outreach, or perhaps some would call it the overreach, that Sebi is perhaps trying to make. And there are some very interesting things that she said in the recent past. The most favorite of mine happens to be Aage Khai Hai. You know, you don't really see the regulator coming out and saying in such colloquial terms so easily that our job is to warn investors and we can tell them Aage Khai Hai, you want to jump in, it's up to you. Another thing that caught my fancy recently was that she said 9 out of 10 investors who dabble in equity markets, who dabble in derivatives, futures and options actually lose their money, and hence mutual funds is the most obvious choice. I'm 100% sure you're going to agree with that, right? And that does great for you and for your business. But honestly, are mutual funds the only options that investors should explore?
I'm not going to say anything but yes, but I think mutual funds solve the purpose for a wide range of investors. Look, I think you asked a lot of questions. I should start by saying that while people have many different perspectives on regulation, I do believe the mutual fund industry today at almost 50 lakh crores is what it is because it is so well regulated. I say with great pride, when I talk to anybody in any business, that I represent the most regulated industry in this country. And I genuinely say it with great pride because I believe finally as a mutual fund company, your product is trust. And we've built a product which is transparent, which has clarity of product thanks to scheme categorization, which has clarity of fees. A 100 rupee investor and a 100 crore investor are treated in an equally democratic way, which is not true in many things in this country. And I think today if you put your money in a mutual fund, you can get it back without having to make a call, which I have to do at a bank branch or if with my PPF account. So I think regulation has made us what we are. At the stage, and I've spent a lot of time in overseas markets also, at the stage of financial literacy that India is at, an accident can be very costly. So it is better that your boundaries are well defined. Even more well defined than they need to. As far as I think the Aage Khai Hai, I think it's fantastic that someone is coming out and saying,
speaking a language that people understand.
It's there for you to see. It breaks my heart to see that there are 10 crore investors in crypto, that there are even more investors playing these online games like these cricket, whatever games that I don't want to name companies. It breaks my heart that there are 10, 12 people who are going there and gambling with their money and less than 4 crore people who are mutual fund investors, that there are 40 crore people who pay Netflix or Prime 100 rupees a month and don't want to start a 100 rupee SIP.
So where is the problem still? I believe that SIPs, of course, you know, the ease of equated sort of payments month on month or whatever frequency you set. In addition to that, I think even the fintech boom has happened at an opportune time. That making investments is so easy.
Yes, it is.
You don't really need to go through somebody who's going to take a check from you, is going to keep reminding you that, hey, is your balance in your bank account good enough? Do you want to continue your scheme? Do you want to redeem it? You don't have to go through any of those hassles anymore. So at one level, SIPs make it easy, and we've seen those numbers month on month. I think when AMFI releases the data, you see that it is the SIP which is the driver.
17,000 crores.
Exactly, in the driver's seat of these regular investments coming. At the other end, there's fintech. But I also see that fintechs, while they offer you ease, but because they are faceless, because it gives you the flexibility to make the investments as you deem fit, they also run a risk. And that risk gets further accentuated when you're watching YouTube videos of non-registered investment advisors, when you're looking at finfluencers, as they're called now. How do you sort of make sure that the education reaches a level that people are able to discern that this is a right advice and this is a wrong advice, perhaps motivated?
So I think you're right. One is that the awareness of mutual funds has gone up. I've done this poll in many audiences, including the sets of Shark Tank, with random people, and asked, how many of you know what a mutual fund is? And a large percentage will raise their hand. Incidentally, if I say how many of you will know what an SIP is, an even larger percentage will raise their hand. But if I say how many of you have done one, then that percentage is small. So I think we have, thanks to mutual funds, Sahi Hai, digitization, fintechs, made some progress on the curve of awareness. Even domestic help in a house, a driver, a person I meet at a hospital will know कि ये कुछ mutual fund SIP, these are words.
कुछ है और सही है.
हाँ,
क्या है? How to get there? Maybe not
you
yet.
don't know. So that translation, I think, needs to happen. You made a very pertinent point about advice. Years ago we started a campaign as Edelweiss Mutual Fund called Advice Zaruri Hai, which said that please go out and take the process of financial advice seriously. Now, if you wanted knee surgery, you would not YouTube the answer, or at least I hope you would not YouTube the answer. Or if you wanted tax advice, you would not YouTube the answer. But suddenly when you want financial advice, you think your uncle and the random gym instructor on YouTube can give you advice. And I am glad that Sebi is taking some steps against some of this community. I don't believe social media is bad, by the way. I am very active on social media, and I think it can be a great platform to spread financial messages responsibly. In fact, I believe the regulator also would support responsible communication through the platform of social media, because that's finally what appeals to young India. So that is the channel they listen to. So you have to talk on that channel. My problem historically has been that, one, when anyone's speaking about financial advice, they have to be qualified. This is serious business. This is not selling lipstick. The second is their incentives behind what they're saying have to be very clear. There are a lot of regulations on mutual fund distributors, registered investment advisors, because you want to know that if I'm listening to you, why are you saying what you're saying? So I think that is very important. The increasing awareness of the right kind of financial advice is something that I hope we hear more conversation on.
All right. So you did touch upon, a lot of aspects here, but I really want to come back to this whole issue of influencers, which is plaguing this whole sort of sector and hitting direct investments of people, money of people. What is it that can be done literally at not just the regulatory level, but even at a legal level? Do we have enough checks and balances? What is preventing the legal system to come in and take down those videos, take down those influencers, celebrities, and have some sort of a punitive penal action?
See, it is a more complex problem than one thinks it is. And I think, to some extent, regulators have also spoken. There is something called freedom of speech. And you can't curtail freedom of speech. Now, if I want, as a random individual, I can put up a video on YouTube saying this is what's good for your money and here are a few tips, etc., etc. I can go do that. Who stops me? It's freedom of speech, right? What you can control is that influencers are not used by regulated entities, regulated financially. So SEBI, for instance, regulates a large number of financial services entities. I think what it's proposed is that those entities don't have any bearing on influence have any dealing with influencers. That, in my view, is very smart regulation, because you're trying to control what is in your ambit. I think public awareness of this problem at a government level is also something. So you've had a lot of campaigns to educate people about health, to educate people. You need public campaigns to educate people that financial advice, bhai, sahi insaan se lo.
Very true. Couldn't agree more. Now, you also touched upon cryptocurrencies, and I think that is something which is of great interest right now, especially with what we have seen in the US. I mean, within a span of a year, maybe a couple of weeks, more than a year, we've seen FTX go down. And now this whole CZ issue at Binance. And we are coming to realize that even a shocker like what happened with CZ going down and pleading guilty, we haven't seen the crypto markets move the way they had actually fallen when FTX had collapsed 1 year ago. So, I mean, how do you deter people from looking at a cryptocurrency as a solid investment tool right now, despite all the ills that have emerged around it? So that is question number one. And I have a linked question to that as well, is that isn't it time now for India to have some sort of a legal framework around cryptocurrencies? The problem is regulation. Let's go ahead and regulate it. But people, if they still want to make those punts, take those risks, not have the backing of real assets supporting the price movement, so be it.
So I think 3-4 years ago in India, crypto was a far more elevated problem, and I think that's when these 10 crore crypto accounts and a lot of this happened. I mean, I remember coming to, this is Delhi, and I remember coming to Delhi one Diwali, and literally every uncle and family friend saying, "Beta, I'm going to put money in crypto."
Were they playing Teen Patti on Diwali night with cryptocurrencies?
I mean, effectively after the Teen Patti party, it was like, since I'm in the finance business, Radhika, should I put money in crypto? And I told one uncle, you see that pond in front of you, because we were sitting at one of the golf clubs, you'd rather put money into that pond. And I remember quite a few influencers and folks even talking about crypto as a part of your asset allocation. And at that point, I had made 2 statements which I stand by. Is one, don't invest in anything that is unregulated, because it's bad.
Which is what you tweeted recently as well.
Which is what I tweeted recently, which is, I think, the fundamental principle of investing. India has seen enough unregulated asset classes go very awry. The second thing is, don't invest in something where you don't understand why it's not making money. So with crypto, I would always ask a lot of people, why do you want to invest in this? And the usual answer was, well, my friend made a lot of money. It's a very powerful format. And that's, with equities, I know why the asset class is going up, right? With fixed income, I know why I'm getting a certain yield. With real estate also, with crypto, I don't know why. Now, I think in the last 2 years, to give this government credit, a combination of, whether you say it explicitly or not, saying that we don't really like crypto. We don't have regulations on crypto, which means it is unregulated. And the taxation that has come on cryptocurrencies has actually been a very good deterrent. So I think this movement has been nipped in the bud quite a bit in the last 2 years. Completely, I don't know. Beyond a point, people will do what they have to do.
But then why not regulate it? Why not bring it into the formal ambit? If the concern is only with regulation, I understand that, you know, it doesn't have a formal
it stands on, until a regulation comes, by the way, it is unregulated.
Correct.
And to choose to keep it unregulated is also, and I don't know what the thinking is, but to choose to keep it unregulated is also a choice. Till there is a regulation, it is an unregulated product. So why should anyone touch it?
Yeah, absolutely. Right. So, you know, let's bring our focus back to asset allocation, since you mentioned that. Should crypto, you're saying, should not make it to your asset allocation at all, no matter who you are, right?
I don't think so.
So, what should be the asset allocation? Let's say, let's break it down into 3 buckets, right? If I want to start investments for my daughter is a little older than your son, but if I want to start my an asset fund allocation for my daughter, for let's say her higher education and so forth, and I have a time horizon of about 10 to 12 years for higher education, what should my asset allocation be? If I don't have a child, if I'm a regular middle class salary earning, income earning, let's say, you know, 35 to 45 year age bracket individual, what should my asset allocation be? And if I'm closer to retirement, 2 years to go, 5 years to go, where should I park my money?
Sure, and I think mutual funds can give you solutions for all 3.
Mutual funds are here for all 3.
Of course. So I think for children, especially if you're planning for young children, equity is really a great way to go. And I love the idea of planning for a higher education goal for your daughter. That's what I did for my son. If you have a time horizon that's 10, 15 years, equity works really well. A combination of a large and mid-cap fund or a multi-cap fund. Small cap, since they can take the risk, they have time, works really nicely. If you're planning to educate your child abroad, this is something that we thought about, then having an international fund could help mitigate some currency risk, because the dollar risk, you know, may play out over the next 10, 15 years. So that's what I suggest for children.
So in what ratio? How much of it should be Indian equities, small cap, large cap, multi-cap?
In our own kids' portfolio, we've done 65-35, something of that sort, India. But generally, I think for most investors, by the way, pure large cap portfolios don't make sense, because if you look at the structure of the market, it has changed. Your average small cap company today is almost $2 billion.
Right.
Your average mid-cap company is $4-5 billion, and a lot of market leaders are present. So in general, I also have a belief that portfolios should be far more multi-cap in nature than purely large cap. For retirees, I think hybrid funds work beautifully. I love balanced advantage funds. I love aggressive hybrid funds. They typically have 50 to 70% equity and the rest fixed income. It's a very tax efficient way to do asset allocation. And once you want regular income, which is the need of this bracket, you can do a systematic withdrawal every quarter. So like my mother-in-law does this, works really nicely. The more nuanced one is the middle category, which is the 35 to 45-year-old, where I really think you need to map out your goals very clearly. And almost bucket money.
Would goals be very different for individuals belonging to the middle class, salary, income
Absolutely,
for
and that's why,
that age bracket?
And that's why investing is very different in that bracket. I think a very simple framework that works for me is bucket money into 3 categories. Very long-term money, which is clearly equity money. I mean, it could be, I call it 5-year plus money.
Chalo.
Long-term money. That's why I call it very long-term. That's your equity money. That goes into multi-cap funds, etc. Mid-cap funds, multi-cap funds, whatever you want to call it. 3 to 5 year money, that goes into hybrid kind of products or fixed income products. And then short-term and contingency money that goes into fixed
emergency
income
funds, etc.
This is a way to start thinking about your asset allocation. Today, I think you should have exposure to large, mid and small caps. You should have fixed income and contingency exposure.
A lot of investment advisors are actually saying that the small cap sector is overheated and this might not be the best time to enter. You don't agree with that school of thought?
I don't agree with the school of thought. I think the narrative, and we run a fairly large mid and small cap business. I think small caps are early in their earnings cycle and in the midpoint of their valuation cycle. I'm not calling them cheap. But I do think structural, and I also think this timing of aaj small, tomorrow large, investors do a terrible job with it. I think the better solution is a bundled product like a multi-cap one that mixes small, mid and large. You have to find structural answers. Remember, you also pay a lot of tax and exit rules in doing the shifting.
Of course. So it's better to lock in and stay invested for the long term.
Just come up with simple. I love, for most investors, I think,
simplicity is the answer.
What I call khichdi solutions in a good way, dal, rice combined, one pot meals they call them in the West, where in one pot you can have your dinner without having to do too many dishes. That is what balanced advantage funds, equity debt makes, multi-asset funds, multiple products mixed, gold and silver fund, multi-cap funds. I love one pot solutions.
And do you invest only in Edelweiss mutual funds yourself?
I invest largely in Edelweiss mutual funds. Before my Shark Tank investments, I think I don't own any stocks outside of ESOPs. So all my investments have been mutual funds. A large part of them are Edelweiss mutual funds, some external for diversification. I've always maintained that. I think about 60-70% Edelweiss. And most of the funds I recommended to you are things in my portfolio, mid cap, small cap, bags, etc.
Let's come to the elephant in the room, or rather, the shark in the room.
The shark in the room.
Shark Tank, a shark soon to don the seat of an investor. What are the first thoughts that come to your mind when you see yourself sitting in that chair talking to young, bubbling, fresh startups? What do you want to go after? Are you going to show the shark's teeth that can scare or the shark's teeth that can bite?
I don't want to scare. I don't want to bite. I think my reason behind doing the show was that finally, before being an investment professional, I'm an Indian. I'm an Indian who's been an entrepreneur. I've also built Edelweiss Mutual Fund like an entrepreneur, although in a larger setup. And I invest in companies and I invest in businesses that are a product of Indian entrepreneurship. I want to contribute back to that ecosystem. I want to be there to provide capital, ideas, and voice to a show that has highlighted Indian entrepreneurship. So there's no sharky teeth and mean behavior. I hope I'm a reasonably nice, empathetic.
I mean, you seem to be definitely on this show. You seem to be, all smiles.
I don't think I'm that mean a person. So, I do believe that it's a great thing for this country that we've come from a point where a young person aspired for a permanent job and now is saying, regardless of where I come from in this country, and even at the age of 21, 22, I want to take the risk to run a startup. So I think that is a huge success for India.
Tell me something, with your own personal experience and whatever you've seen of the sector, the startup segment, not the sector, do you think really that great startup ideas can actually be built or discovered through the medium of television and not really in the garage and not really in a co-working space where you're actually putting in that effort. I mean, is television, entertainment, masala, drama really the right format to discover true blue entrepreneurship?
So I think the entrepreneurship has existed. When I see the businesses coming on the show, without saying too much, they have seasoning. They're not ideas that came 3 months ago. Many of the entrepreneurs have years and years of experience and delivery before coming on the show. I think the show is a platform for one to showcase the stories. Like you see a story of a small town or someone coming from a tiny place in Maharashtra building a meaningful business, and I think that gives hope to a lot of other homes. And the show is also a place to raise capital, and also not just raise capital, because capital can be raised in many ways, also to get the support of folks like me and others who might have experience building businesses. So I think TV is that platform. I think the show is a place to give voice to entrepreneurship at large. And that is how I see the show.
Lovely. So what are the themes that you are specifically going to go after, and what is it that you see in an idea, in a founder, entrepreneur, in the personality or in the confidence, or what the product really stands for? How do you view it?
So of course, this is personal capital. I must clarify. This is not client capital.
Edelweiss mutual fund money going in.
It cannot be, and it will not be. So it is Radhika Gupta in her personal capacity. Of course, there is a certain DNA that you have.
So you did not mention actually that you are also doing alternate investments then in your personal portfolio, right? So I think this becomes your alternate.
I said before Shark Tank it was all mutual funds. So this is my unlisted investments. But you can't take the investment professional out of the person. And so I think many of the same things, see, companies are companies. So in a large business, you look at management very closely. I think in a startup, you look at the entrepreneur, their resilience, their ability to execute, their clarity of wanting to follow a certain path is extremely important. I think in a large business, you look at margins, you look at profitability. Here, perhaps you don't look at that, but you look at unit economics and robustness of business.
Are you looking at unit economics seriously for your investments? Because I think the whole debate in the whole startup ecosystem has been growth at all costs.
And
damn the unit economics.
I love growth. I love growth in Edelweiss Mutual Fund. We've been the fastest growing in our category, but we've also turned a loss-making business into profitable. And I think.
But that is something that startups across the board have found very difficult to do, because they've burnt investor money. They've pretty much played bonfire on investor currency, literally campaign after campaign, and very few of them have turned profitable.
That's perhaps where my lens is a little different. I don't say you should be profitable today. Look, I know the reality of building a business.
But there should be a path to profitability.
I built a mutual fund business that was loss-making at some point, but it is profitable today, right? And the same, there should be, fundamentally, you should be selling something at a price that someone wants to buy it at and build a business that is sustainable. So I like this line from our annual report last year, which says strong foundations, sustainable businesses. So I think the foundations of unit economics should be strong. And obviously, you don't have price to earnings and price to book ratio metrics for startups. I mean, you look at them in your listed companies, but you have some sense on whether the entrepreneur is in the right zip code of valuation, or are they just quoting something.
So how do you see valuation in the case of unlisted companies, where in any case these are new businesses that have come up? Do you look at X times revenue as a parameter? Do you see basically the size of the industry overall? How much are they likely to capture, and a proportion of that? What is the metrics that you employ in your mind, maybe not on paper, while arriving at the right valuation?
I think it's a mix of that. I think it's a mix of some metric on revenue and where the business is at. In the case some of the businesses are profitable, you can look at some of those metrics. Size of the market opportunity, but in your head, I think it's some of the metrics. I mean, we also run an unlisted fund as part of Edelweiss Mutual Fund on the AIF side, and we have exposure to businesses in the 500 to 1,000 crore bracket. So we look at those metrics. I think that is important. I think the fourth thing I should add is that on the show, and this is completely distinct from Edelweiss Mutual Fund, of course, I also want to deal with businesses that speak to me personally, where I can add some value.
So what is your involvement going to be beyond the funding round? Do you intend to occupy board seats? Do you intend to be part of regular business meetings with these young entrepreneurs who would have access to your capital?
It's too early to say.
Okay.
Still work in
Are you open to the idea at least of occupying a board seat on the companies that you invest your money in?
Board seat is a legal position, so I don't know, but I'm open to the idea of giving time. I do want to certainly give my time in some capacity.
Okay.
How much of my time is a question, because time is always limited.
Yeah.
But time is important. I think when an entrepreneur comes on a show like that, they come for both capital and time. The time to advise on how to build, to scale up, to connect, and that's why I said it's also important to look at businesses that speak to you.
Right.
There's some categories that I naturally like. I'm not a sports person.
Okay.
Very few sports related things, like it's just not my zone.
Right.
I mean, this is personal, but there are things that are
exciting to you.
Yeah, there are things that are just exciting to me.
Right.
I mean, that's the way it is.
So would baby products fit that category at the stage that you're in right now? Would a technology linked fintech, around the scope of fintech, be a product that you would be interested in?
I have many interests.
So tell me what are your interests?
I like food, I like kids stuff, I like clothing, I like finance. It's quite wide. So you have lots of options, guys.
Lovely, super. I can't let you go without asking you a very, very macroeconomy question.
Okay.
And you know, the whole sort of Goldilocks, elusive Goldilocks scenario that a lot of people find India in right now. Do you think the Indian economy is right now at that perfect Goldilocks stage? We are not too overheated. We are definitely not a cold economy. And then in light of that, are the growth projections for India, to your mind, to your experience, really realistic? I mean, we are looking at, of course, 5 trillion is no big deal.
5 trillion will happen.
I know it, right? That's going to happen. But then are we really looking at, in the next 25 years, 2047, achieve a growth rate of 7.6% or so consistently and reach that area where we are actually competing with the US and China, as we are sort of, so gung-ho about as a country right now?
I think we have, without putting numbers to this, I think we have a reasonable shot of being the world's third largest economy.
But third largest with what sort of a gap between the second largest and the third largest? Isn't that going to be critical?
Not really, because it's not a contest. I think the contest is to do the best for your citizens and bring as many people into the middle class and upper middle class.
Right.
I actually think India should not be in a horse race with China and the US. In fact, I think one thing that has served us well is living our narrative our own way, including the way we handled COVID.
Yeah.
So I think you have a shot at growing at 6.5 to 7%, but doing it sustainably
consistently year on year
without
for the next 25 years.
Without making mistakes. I think your demographics are very powerful. You are perhaps in this point where China was 15 years ago. We're doing that migration from 2,700 odd per capita to 5,000,
right,
where you will see money go into discretionary consumption, into premium, into investments. So I think your demographics as a country till 2050 are going to be extremely powerful if you can channelize the consumption, get your young people to work, and unleash the animal instincts of the private sector, which in my view is happening today.
Is that likely to happen more after the general elections are over next year and we know whether there is continuity or change? Is that when the animal spirits will really get unleashed?
No, I don't think so. I think they're already at work. Elections are a short-term event for the market.
Right.
Since 1980, the Indian economy has doubled every 6 years.
Right.
And I see no reason it will not continue to do so. I think the two things that are important is continuity of reforms. And one of the good things about India is across governments, we've actually seen continuity of reforms. Right. Very few governments have come in and reversed something that, right, in fact, many things have been carried forward. And the second thing I think is a realization that we need to do long-term capital investments, which has really happened. We need to build infra, we need to focus, less populism, more long-term investments. I think if you get these two things right, we are good to go.
We are good to go, and yeah, sustenance is going to be what India has to focus on, and consumption driven, a larger middle class will take India forward. Radhika Gupta, what a pleasure it's been to have you with us here on News9 Live, and we hope to keep getting you back in person, preferably back in our studios soon. But wish you all the best with Shark Tank.
Thank you.
And I wish the show and you all the success. Thank you so much for joining us here today.
Thank you.
Well, that's a wrap right here on Boardroom Brunch. Thank you very much for watching. And of course, you will find this show even on our YouTube channel. So don't forget to go ahead, like it, share it, comment on it, tell us what you liked and what you learned. And of course, don't forget to hit the subscribe button. From me, for now, thank you so much for watching. Goodbye.